Lance Roberts here with 3 minutes on Markets and Money, talking about the difference between SARS and the Wuhan virus, the difference between then and now. Article out today on the website talking about the differential between SARS and Wuhan, this Wuhan virus. There's a lot of implications at the moment that simply say that, oh, don't worry about the virus because if we go back and look at SARS, there was very little impact. Well, that's not exactly correct. If you go back and look at SARS, actually there was about a 13% decline in the markets before it began to recover. And yes, it happened very quickly. The decline and the recovery happened very quickly. But there's a big difference between where we are today and where we were back in 2003 when the SARS virus actually kind of hit the markets and the domestic economy. Think about the date for a moment, 2003. What had just happened previous to 2003? That's right. We had just gone through a recession and through the dot-com crash. So markets were already down by almost 50% from the peak of the market in 2000. The economy had just gone through a recession and then SARS hits, and where SARS hit was actually the very tail end of the sell-off of what happened during the dot-com mania. The bulk of the risk of the market had already been washed out. Valuations had been reversed. The economy had already taken a hit on many, many fronts and had begun to stabilize. And then so when SARS hit, there was not a lot of damage that could already be inflicted upon the economy because it had already been done by the dot-com crash, Enron, WorldCom, Lucent, all the other issues that happened. Don't forget 9/11, that it all happened prior to that impact of SARS. Today is a vastly different story. Valuations across the board are in the 99th percentile of valuations. And it doesn't really matter how you measure valuations, whether it's price to sales, price to earnings, etc., all at extremely high levels. And of course, the economy is in a 10-year expansion. The markets are in moving into the 11th year of a bull market cycle, extremely long by historical measures and extremely deviated from very long-term means. So again, the environment is diametrically opposed to what it was back in 2003. So making comparisons back to 2003 is a very dangerous concept, and assuming that, oh, don't worry about this is just going to work itself out in a couple of days and we'll all be fine and markets will keep going up. Yes, maybe that's the case in the short term, but the longer term impact is still there. Here's one other aspect of all this too. If you take a look at what's happening with commodities had bounced in December, and we showed a bit of sign of pickup in economic activity. Now that's being reflected through a lot of the current economic reports. We're seeing upticks in December numbers, confidence, manufacturing, etc. In January, beginning in January, before the Wuhan virus actually hit, we actually have already seen a dramatic decline in commodity purchases and prices is really kind of across the board, whether it's coffee beans or soybean oil or pork or live cattle, big declines in those prices, suggesting that something has broken within the economy somewhere. And the impact of what's happening with the Wuhan virus is almost assuredly going to allow China to have an excuse not to meet the agricultural purchases and export purchases that they had agreed to in the trade deal. So this is going to be a reason why China can't meet this. This is going to be an impact here in terms of slower economic growth. And there is an impact potentially globally from the potential economic slowdown that could be picked up here from the virus. And we're looking at potentially somewhere between 0.5% and 1% being clipped off of GDP, which is already running at below 2%. The latest Atlanta Fed report just came out yesterday showing economic estimates for the fourth quarter running about 1.5% after the recent data. So pay attention to all this because, again, a lot of people assuming that, hey, don't worry about this. The SARS virus passed quickly. The markets went up. Today is a very, very different environment. Be sure to get by the website and get our latest report. It's on there now. The difference between the SARS and Wuhan virus then and now. And get all of our other blog posts, podcast views, and everything else on our website, realinvestmentadvice.com. I'm Lance Roberts with 3 minutes on Markets and Money.